Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for February 10th, 2025. Well, I hope everyone had a restful weekend. We have a jam-packed week of economic data coming our way, and likely to be a very, very busy week with uncertainty and certainly volatility. Let's take a look at what happened overnight. If we take a look at Asian markets, kind of a mixed day in there on Asian markets. We had Australia just a little bit lower. The Nikkei was just a tiny bit higher by 0.04%. India was lower after a surprise interest rate change, so lower over there in India, while Hong Kong was up sharply, up 1.84%, in Shanghai up 0.56%. If we take a look at European markets this morning, they're bullish across the board. We have the DAX up this morning 0.20%, FTSE is up 0.57%, and the CAC is up 0.26% as they shrug off the new potential tariffs that Donald Trump mentioned this weekend. If we take a look at U.S. futures this morning, also shrugging off any worries about economic data and, of course, the new potential tariffs, with bullishness across the board. If we take a look this morning, at this very moment, we've got the Dow futures up 158 points. The S&P 500 futures are up 26 points, and the NASDAQ futures are up 145 points this morning. If we take a look at oil's trying to get a little bit going here this morning. Right now, oil futures up 71.95 a barrel. To up 95 cents. Brent crude is also higher this morning, 75.48 a barrel. If we take a look at natural gas, well, natural gas is a little bit higher here this morning as well. Right now, up almost 11 cents. So keep an eye on that. Really potentially could pop out of that little consolidation right there. If we take a look at cryptos this morning, well, boy, they've been awfully volatile here. Bitcoin this morning trying to bounce back up right now, up $1,400 a coin, and Ether is up 1593, or up 0.60%, with a little bit of mix in those cryptos this morning. And if we take a look at precious metals, well, we've got precious metals showing some bullishness as well. If I could type the right symbol, gold pushing up strongly here this morning. Right now, gold is up $45.20 an ounce at $2,932 an ounce, headed toward $3,000 an ounce in gold. If we take a look at silver also having a really good morning, up 27, almost 28 cents. Let's look at silver here, bouncing up after a pretty rough day on Friday. Right now, coming in at $32.72 an ounce. We've got copper just slightly higher here this morning. COPX is trying to pop up. Platinum, palladium are also higher ever so slightly here this morning. And you'll want to be taking a look at steel and aluminum, things like that. If we take a look at Alcoa here this morning, it's making a little bit of a pop. Steel Dynamics breaking through my alert here, showing some bullishness here this morning as a result of this tariff threat anyway at the moment. Let's take just a quick look at what's going on in our bonds. Bond yields right now, we got the 2-year bonds at 4.28%, 10-year bonds at 4.49%, and the 30-year bonds are at 4.70%. So keep a close eye on those. As we mess around with tariffs, we could certainly see those items begin to move higher, so watch that carefully. Let's take a look. Well, I guess that's it. How about we settle in? Let's buckle up. let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. Hope everyone had that wonderful weekend and restful weekend, because it's going to be busy. Today is your best day of just kind of taking a breather here in the market, where every other day it looks like this week could have the potential for some substantial volatility. Let's take a look at these index charts and see if we can gain a little bit of information about how we might want to approach the market for today. Remember, look at them without a bias. Look at the opportunities here that could be both to the upside and the downside, and try to focus in on what the actual price action is saying, not what you want it to be. If we take a look at the diamonds, you can see we're trying to pop back up after that really ugly selling yesterday, and the critical thing is going to be probably getting back above this area of price resistance in the chart. If we can push back up through there, then we have that opportunity that we could stretch up and maybe retest some of these resistance areas up here and push back up into that area of the chart. One thing we'll have to be keeping an eye on is those potential, that little lower high in here. If we can push on through there, we might find some resistance up in that area. Now, if the bears were to come up with any reason for inspiration here today, then that possibility breaking back down below this low would probably raise some significant concern, and we'd probably drop into this next area of price support in the chart. Now, if that price support were to fail, then here we have that opportunity that we could push back down and retest that low. So watch that carefully. If those bears do find a reason to do that with some of the data that we've got coming our way this week. And if we take a look at our moving averages in here, you can see we've still got that 50-day moving average that could hold us. Push back down into there would not be out of the question after a lower high. But, you know, the motion of the market, we have a very emotional market right now, and it's all about buying tech, so watch that carefully. If we take a look at SPY also had a really rough day yesterday, gapping up a little bit this morning in the pre-market. Watch that carefully. We do have this downtrend in play here in the chart. We're going to have to break back through this resistance right in here to push back up through that downtrend, and then we'll test this resistance up here to see if we can start breaking through these areas of the chart above. And then, of course, all-time highs could be around the corner. If we have the bears, for any reason, push back, well, we can see this low right in here would be a pretty good area for us to test. And if that area were to fail, then we start pushing back down. And I think the real concern would be in here is if we're creating some kind of down channel here in the SPY. So watch that carefully. Remember, we're holding above our 50-day moving average, but a break of that candle low would probably test that 50-day moving average and probably raise a little bit of concern overall in the market. Our QQQ, also rough day on Friday, rejecting this resistance up here in the chart. Notice we came all the way up there, we tested it, and then reversed on that news of tariffs. And here we have tariffs coming our way. So watch that carefully. What created this bounce here overnight, I really have no idea, other than today is probably our best chance to get something done to the upside with the light of the economic data that we have coming later this week. So watch that carefully. If we can break back through this resistance in the chart and push back up into that downtrend, then we have that opportunity to push right back up here into this area of resistance that we failed from on Friday. See if we can push on through. If those bears were to have anything to say today, well, you can see pushing breaking back down through the bottom of that big black candle would probably raise some concern, and we might stretch on down into this area of price support, which honestly is a pretty good area of price support, so watch that carefully. Now, remembering in here, we're kind of hovering above that 50-day moving average, so a stumble here could easily have the QQQ failing below that 50-day, and we'll want to be watching that pretty closely. If we take a look at our Russell IWM is already below its 50-day moving average. We rejected this area here, moving to the downside, but we did catch a nice little area of price support here in the chart. If we can get some bullishness going in here, well, let's look and see if we can re-attack this resistance of Friday's high, and then we may be back up here seeing if we can break out of this little resistance area in the chart on IWM and get something bullish going here. If the bears, however, were to find that inspiration breaking down below that support and Friday's low, would likely start taking us back down into areas of support like this in the chart. And of course, that failure of the 50-day moving average, we would start worrying at that point whether or not we're going to see the 200-day moving average in IWM. Let's take a look at our VIX. Our VIX had a pretty good pop there on Friday with tariff fear and bouncing up pretty substantially. We got a little bit of a double bottom here pushing up. We got about 16.5 handles there in the VIX. If those bulls continue to push here this morning, let's see if we can break this right back down into this area of price support. And of course, breaking down below there would probably be very, very bullish for the market and get something going suggesting there is no fear. However, I think there is significant fear here in the market. We may just bounce around and rest in this area a little bit today, heading into these big economic data points. And remember, if those bears have anything to say, popping up through here would start to raise that concern and fear in the market. So watch that carefully. Now let's take a look at our T20s, our T2122. T2122, where is my, there it is. T2122 pushed back on Friday pretty substantially. We fell below 50% here in the market. With the gap up here this morning, I would expect that gap up to push us right back up into this area here pretty quickly as everyone races back in to the market. So watch that carefully here for that push back up here today. And of course, if we can continue to push, then we'll be up here in that bearish reversal zone. If the bears, however, were to reverse this today in any way, shape, or form and push this back down, well, then we got some pretty good opportunity for movement to the downside as well. So kind of keep that in mind. Our T2108 pulled back again on Friday, but it wasn't terrible in here. For the pain that we saw in the indexes, it really wasn't terrible. Pulling back here just a little bit, we've got 48.88% of the stocks holding above their 40-day moving average. So we don't have a big push, and I'm guessing with the gap up here this morning, we're going to break this above that 50%. Now the question is, can we hold it? We broke it a couple of times and haven't been able to hold it. So watch that carefully. You might also want to be paying attention to this longer term downtrend in here. We could find some resistance in that area as well. Now, if the bears were to get something going, well, we've got some pretty good support areas down in here. So I don't know that I would particularly worry about it too much unless those bears really got active. And today, well, at least this morning, it doesn't look like they're too interested in getting a whole lot going on. If we take a look at T2107, T2107 also faded back here on Thursday. Unfortunately, as we pushed to that 50% area here in the chart, we've kind of been getting sequentially lower highs here, and T2107. So the percentage of stocks above the 200-day has been fading a bit, but today's big push in the futures could push that right back up through that little downtrend, and we might be up here testing that again. If the bears were to keep pushing, well, we've got some good support levels down here as well to be watching in the chart. And the real worry here for me is T2101. Even with the bullish moves that we saw last week, it was not accompanied by market breadth. Breadth was just not there. And this is kind of unusual by about this time in the quarter. You know, we have so many companies that reported and they're out of their blackout period. But I wonder if we're going to get quite as much bullishness with the so much money being spent on AI from big tech, if they're going to be able to invest the big numbers back in. We'll want to watch this closely. We need to see some breadth coming back to the market, and particularly today with this big push in the pre-market, we had better see some breadth coming in here, or we could end up being in a little bit of trouble. We might see the bears start to pick up that breadth if that is the case. So watch carefully here. Let's take a look at our economic calendar here for today. And our economic calendar, well, we have a pretty light day today. We've got a 3 and 6 month bill auction in here to be thinking about. And that's pretty much it. If we look forward, though, into Tuesday, well, we're going to start off this week, NFIB Small Business Optimism. Notice we've got Fed speak in here, but the big one is we've got Jerome Powell testifying in Congress on Tuesday morning. So kind of keep that in mind. That's one of those areas where obviously he's going to get grilled by a new Congress here, so watch that carefully. And then we've got a 3-year note auction as well in the afternoon. Now, looking into Wednesdays when it really starts to ramp up, we're going to hit those mortgage applications first, and then we're going to get that CPI number, consumer price index. That'll be really important. We've had this worry on inflation, and that's going to be extremely important. Whether it'll be bullish or bearish, I have no idea, but we'll want to watch that. And Jerome Powell will be speaking once again here on on Wednesday, up on the Hill. If we take a look, we've got a bill auction here, and Bostic will be speaking in a 10-year note auction. Looking into Thursday, it doesn't help us much at all. We hit jobless claims, and then we're going to get the PPI number. So look for the volatility in the mornings. Those uncertainties could certainly create some choppy market conditions as we lead up to these big reports. So keep that in mind. Some bond auctions in here, Fed balance sheet, and then on Friday, busy day, retail sales, import, export prices, industrial production, business inventories. Yeah, it's going to be one of those kind of weeks with some market moving reports to be prepared for. As we look into the earnings calendar here today, well, we've already had some earnings giving us a little bit of movement here this morning in the market, and that would be Mickey D's MCD reporting here this morning, getting a nice pop in the pre-market. I had this set up for an alert, and of course, earnings will mess up just about anything. Watching that carefully. McDonald's coming up. Other reports this morning, we've got CNA, EPC reporting this morning, HAIN. We're going to hear from INCY, NMDY. Whoops. There we come on. I'm going to have to check that symbol. We've got on semiconductor, we've got ROK, ROIV, TSEM, and TGI. These are on that notable list for this morning. After the bell, we have a few more to be paying attention to. AMKR, we're going to hear from ALB. We've got BTG in there. CINF will be in there. COTY, INSP. We're going to hear from KRC, SSD, VNOWTS. That's a few of them on the list here this afternoon. Make sure you click the link below the title of the video. That'll take you back to the morning blog where you can get that full list of notables. So let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much for everyone who does take the time to do that. And thank you so much for everyone who shares these videos out on your social media feed and then also supports the channel through the Buy Me a Coffee link just below the title of the video. Thank you so much. You guys are awesome. Let's take a look at a few of these stocks that could be setting up. And remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market. Remember, with the volatility that we were likely to see, particularly in the pre-market throughout this week, we could, we could have some really good moves. We can have some big whipsaws. We could see some very bearish moves as well. So be prepared for just about anything and make sure you're planning your risk carefully. Now, if we take a look at some of these stocks, well, first off, I'm going to mention Steel Dynamics here again. This is one I had alerted for this week, and unfortunately, with the new tariffs on steel, we're going to be popping this right through here first thing here this morning, gapping up. So keep an eye on Steel Dynamics, looking pretty good in there. You can take a look at MT, which moved big on its earnings report, now resting back a little bit, but I would guess that's going to have some good upside. Take a look at Nucor. Nucor getting a big pop here this morning to the upside. You might want to keep an eye on things like Alcoa trying to push up, because the tariff is not only on steel but also on aluminum, and that's trying to push back up here to the upside as well. So watch those closely. If we take a look at Chewy, Chewy has been setting up in a very interesting pattern here, sliding back out to trend. Friday was a little bit rough on it here, pushing back down. So keep a close eye on this. If this can hold in this area, we get a little bit of bullishness coming in the market. I think there's every reason to believe Chewy might push right out there to the upside. And of course, Mickey D's I had alerted for this week, but I had suggested that the earnings report could mess everything up completely, and you can see gapping up pretty substantially here this morning. So if the risk is okay with you, there is still an opportunity here in Mickey D's. Note that we are pushing into a really big area of resistance, so don't be too surprised if this has to rest now. If it pops up in here, it still rests back into this trend, and then look for your opportunity into that trade on Mickey D's. Take a look at VALE. VALE, really nice looking chart. Nice little bullish pattern in here. Popped through my alert last week, fading back just a little bit, but I got to tell you, anything in the metal and mining sector of the market looking pretty good overall, and that uncertainty that the market is experiencing here is really having a massive effect on gold in particular. So watch that carefully here. We can see anything in that mining sector look pretty good. Take a look at GDX. GDX has been running to the upside, getting a nice little push on through today. Watch that carefully. If we take a look at GDXJ, the junior miners here also breaking through resistance, looking very, very good. You can take a look at any of the individual miners. PAAS, Newmont has been in a very, very bullish pattern, stretching on through here this morning on the news. So lots of those potential charts out there to be paying attention to. I continue to mention if you want physical gold versus the paper gold that you're going to have in GLD, keep an eye here on PHYS. Now, I really wouldn't want to chase it here at this point. It's pretty stretched up. I'd want some kind of rest or pullback, but keep an eye on that. And PSLV would be another one to be paying attention to. You know, we've been watching our dollar bounce around here quite a bit recently, and you can see our dollar is moving back higher here at the moment with some of these tariff worries. So we're going to have to be careful with some of these commodity type plays. We could see them starting to move back to the downside. But I got to tell you, it's really interesting that we're continuing to see so much bullishness here in corn. Corn looking good. It pulled back on Friday a bit, but may push right on through. We've got wheat also holding in a bullish pattern, breaking through some resistance here in the chart. Any rest pullback that comes back into trend here someplace looks like an opportunity. Soybeans also showing lots and lots of bullishness, and we could see that possibility of this pushing out. Looks like this is going to gap lower here this morning, though, on that higher dollar, so watch that carefully. But boy, we're going to have to start keeping an eye on some of these commodity prices if that dollar really starts to weaken. So far, it's holding up pretty well with all these threats of tariffs, but watch that carefully. Take a look at some other trades in here. One of the things that I noticed here is if the dollar starts to weaken, we're going to see some bullishness maybe coming up here in utilities. Utilities holding on to this little upside trend. Now, of course, we've got this downside trend wedging as well, but if we can get any weakness in that dollar coming in, I would look for that opportunity that some of these utilities could push on through to the upside, and there have been some making some moves here already. Take a look at Southern Company breaking through this downtrend, holding above some support. Little bit of bullishness in here could start pushing that right on through to the upside. So I would watch that carefully. Take a look at BP here this morning. BP, some activist investor getting involved here in BP. Big pop here this morning. Any rest or pullback, I think, would give us an opportunity. You'll want to notice breaking out of this big long downtrend here in BP. This might have some interesting opportunity coming along, so watch that closely. Take a look at Walgreens here. Now, Walgreens still in a crummy pattern here overall. It's been all over the place here in this chart, all over the map, back down here to its 50-day moving average. The only reason I bring this up is this little rising pattern in here. If it can hold in this support area, well, it might just have that opportunity to sneak back through to the upside. Watch that closely. It has been one of those stocks very much hated in the market. And speaking of stocks that has been beaten down and kind of hated here for a while, I've been mentioning Coca-Cola. Keep an eye on that. This is starting to rally back up. You will want to pay close attention to this, however. This is going to report tomorrow. Could change everything here in that chart. But it's unfortunate how many of these stocks right now we're getting very, very good bullish setups right ahead of the earnings, and they either pop big or they fail big. So keep an eye on that. Now remember, if that is bullish or bearish, it may have knock-on effects to other things like Dr. Pepper Keurig, PepsiCo, things like that. So keep an eye on some of these old defensive sector names. A few of them are starting to turn back around and come back up. Speaking of that, KHC has been hated. It turned around and really started to push up on Friday. Of course, that was that fear in the market of tariffs, and we started to see some of these defensive sector stocks starting to turn up. Can't say it's going to continue that pattern, but watch that carefully. If we continue to see uncertainty here in the market and that market showing weakness, watch for that rotation into some of these old boring companies, and they have been well beat down. They could be really good value plays here in the market, so watch that carefully. Well, before I go here, guys, I want to cover just something else here today. I've talked about a lot about valuation here in the market, and we continue to see that valuation be really stretched here. Our price to earnings ratio in the S&P 500 continues to be overvalued. If we look at the chart, this was the internet bubble here. We were way up here, 3 standard deviations. Here in 2022, January 2022, we were up here over 2 standard deviations, and you can see we're at 2 standard deviations here still. We are way off the historical norm here in our PE ratios, so we continue to remain quite overbought and quite expensive. There's really not good buys here in the PE ratios on the S&P 500. Now the Buffett indicator continues to be very, very elevated. As a matter of fact, we're at 208%. And it's probably why Warren Buffett has the biggest cash hoard he's ever had. And you can see the Buffett indicator is showing us our valuations have never been this high before. So keep that in mind. If we do get some bearish activity starting to come into the market, I'm not saying that we will, but if we do start to see it come into the market, you can see why it could move quickly to the downside because of these valuations being kind of overextended. So watch that carefully if that were to occur. So with that, everyone, I want to wish you all a fantastic day. I want to wish you great results for your trading. Thank you so much for being here today, participating with the channel. I truly appreciate it. Y'all take care. Be safe. I'll see you right back here bright and early Tuesday morning. As always, wish you all the very best.